Hi everyone, welcome to this week's edition of the weekly market scan, Mind Money Method. And as usual, we're starting off with the dollar index. If I can just point out here with the dollar index the last 2 weeks, can we just see over here how we had some very strong selling, which was related to the China devaluing their currency more so than the Greek crisis, definitely in the euro. That wasn't affecting this. It was more what was going on with China, the second biggest economy in the world, starting to devalue their currency, caused a lot of panic in the market and a lot of selling in the market, and weakened to the dollar index. And then all of a sudden, a few changes were made, and then it caused the market to react and go, all right, things are not that bad, let's buy back. And there was a lot of buying into the market. So it was kind of knee-jerk reactions, and we can see that by the size of the candles. Look how big that is. Look how big that price action candle is. Massive. And then we started forming a bit of an uptrend, and to be honest with you, we broke that level and we've gone down. And the whole of last week, there was steady selling. But look at the size of these candles compared to that. This tells me that the market's settling down a little bit, more so than what it was over the past 2 weeks or so. And we've now started to settle down. So my reaction to this and looking at this is I like it when it does this, because it just shows smaller candles to me is better. A better price action. It's better. It shows that there's no knee-jerk reactions in the market, and it just takes away that risk, more of that risk away, and it allows you to trade as a business and look at it properly, and allows you to trade and gives you a higher probability of making money in the markets. That's what it does. So what I'm seeing is potentially we could have price pull back to this level of about 9,580 in the market, and then come back down. Could come back up, but overall potentially fall back down to this 9,400. It seems that's what it's been doing since January, really, isn't it? Price has pulled around this big level and then shot up, and it's been hovering around. It comes back down to the 94, goes back up, and that's where it's been going around, back down, and then gone back up, and now potentially it's going to come back down to the 9,400. So the price action is telling me this. If I go look at multiple time frames, which they need to be in agreement, is we've got a higher high, higher low, higher high, could be making a higher low, pushing down to this 9,400 mark. We have got the same sentiment looking at the monthly. We're definitely on the bearish side over there. So overall, the dollar index, it's looking a bit bearish. It could change, but at the moment where I see it, because this is what I love about technical trading, is you trade what you see. You don't trade what you feel. You trade what you see. And obviously, psychology is massive and intuition is a big thing, but we really do like to trade what we see when it comes to technical trading. So moving on to some other currencies potentially related to the dollar, we've got the Kiwi dollar to the US dollar. However, with this, generally, if you're seeing a weaker dollar index, could we see a stronger New Zealand dollar? Well, that's right now not the case. It's not the case. So it's not like I've said in the past. It's not always like that. If the dollar index is strong, will related currencies be weaker? Yes, sometimes, but not all the time. In this instance, we're looking here, we've had some lovely, look at that trend, beautiful. And this is the Kiwi dollar to the US dollar is one of the trades where we have made some very decent profit this year, traders within Mind Money Method, and that is purely, can also be shown on our trader development. I think we've got 1 or 2, even 3 videos showing, one of them definitely showing from start to beginning, I think 7 or 8 days into the trade, where we've made some fantastic profits. So we're back in it, potentially going to be back in it. Should I say we're not back in it, but potentially could be back in it, where now we got out, I can't remember, somewhere around here, but now price has moved back down. It's come into the sell zone, and now we're looking like a nice small bearish candle. Potentially price is going to roll back off and go down. Probability wise, if we're looking at the weekly, high probabilities, look, there's nothing in the way here. for price to continue its fall down to maybe even here, this level over here, 5,400 or thereabouts. Definitely even to the 600 as the first stop, a big number over here. So price is looking very bearish on the Kiwi dollar to the US dollar. So this is a market which we're stalking. Potentially, as it stands, I might even be entering into this market again. Definitely looking like that could be the possibility. So if we go look at some other currencies, the Australian dollar to the US dollar, just another currency related to the Kiwi dollar. Well, look, there's been some strong selling. I mean, the the US dollar has been selling off over the last week, and if we look at the reverse side against the Australian dollar to the US dollar, well, the Australian dollar has been what? It's been strengthening quite strong. If you look at this, it's actually pulled right into the sell zone, but it's now gone even past. So the Australian dollar is pulling in quite a bit. It's showing this also, bullish over the last a week and now into this week, and even on the monthly, it's right at the top there. So Australian dollars strengthened a bit against the US dollar, but could it reverse back? It's not a market I'll be looking. If this candle wasn't here and this was the close of last week and the beginning, this could be definitely a candle where I'll be looking very bearish that it could roll over and go back down again, but that hasn't been the case. So it's a market I'm definitely stalking, but it's not a market I'll be entering into at this point in time. For me, so far, the NZD USD market is looking like the best of all the charts so far. So if I go look at something else, let's look at what else can we look at. Let's look at the AUD to the AUD to the euro. Let's go and look at that. So once again, the Aussie to the euro, we've had some strong selling. We've come to a level over here where it's now starting to just come into the consolidation, if you want to call it consolidational period, which coming around. A lot of consolidation over the last few weeks. We're coming in here. Where is it going to go? Well, the movement is potentially that it's going to continue losing its weakness, weakening against the euro. So, I mean, if we look at the weekly candle over here, we into a downtrend. Potentially it could get a bit stronger, but then sell off. I mean, the momentum is price action. Look at that price action. Look at that, my MACD over there and RSI, they're completely in agreement. So probability wise is that this market's going to roll over and continue on its downtrend. So it's another market that I'll be stalking, no doubt. If we go look at the reverse of it, why don't we go and look at the euro to the AUD? So that would be over there, and we should see, yep, a mirror image. Well, shall I say, yeah, mirror image. So the opposite of it, where the euro is strengthening in a lovely uptrend, a level of consolidation, potentially for it to continue its uptrend. So could you maybe enter into both markets, do a bit of hedging? Yes, it is potentially, some people do that as a strategy, but as a risk and money management, if I were going to be doing that, I would certainly only be risking 0.5% on each currency pair, and I wouldn't risk 1%. Because why? Because my money management rules actually, and my trading rules actually state that. So I would be sticking to my rules first and foremost, and that's what I would be doing. So overall sentiment for the US dollar index, it's looking quite bearish. If things do change, obviously then I would have to reassess, but as it stands with me looking at the markets right now, US dollar index looking quite bearish, and the currencies that I've just mentioned right now, those are currencies I would be stalking. The highest probability right now is the Kiwi dollar to the US dollar, potentially for it to continue on its downtrend. I haven't entered into anything, but I'm going to be looking at this daily candle over here. I'll be looking at this and seeing how and what this is going to close off at the end of the day. And right now, it's looking like, look, try to buy up and it's being pushed down. So the bears are in charge and in control right now of the market. So that's it, folks, for this week's edition of Mind Money Methods Market Weekly Scan. And happy trading, folks. I hope to see you and speak to you soon. For those of you who have sent in messages and have started joining our training, we are really welcoming you aboard, and we will be having our monthly webinar taking place very, very soon. And so get those trades, capture all those trades so that we can start analyzing it after you've done your courses. Happy trading, everyone. Have a great week, and we'll talk to you next week. Thank you.